Instead of identifying daily bias, looking at higher time frames, and getting confused, you can use this simple ICT plus volume profile trading strategy that can bring you results that you've never seen before. Now, I've been trading order flow and volume profile and with ICT for the past 5 months, and I've seen insane accuracy. And as a trader, I'm trying my best to be the best version possible of myself. So I'm always learning, and I'm always trying to increase my win rate and increase my consistency and precision. So in this video, I will be teaching you how you will be combining ICT and volume profile. And we're going to go over two setups that you can take with this strategy. So the failed auction and the breakout setup. This strategy is mechanical and has a high win rate. So we're going to be using the fixed range volume profile. Okay. So first thing first, what you want to do is go over here to the fixed range volume profile, draw it anywhere on the chart. Okay. Then double click on it and copy these settings. So for row size, we need it to be on 1000. Value area volume, put it at 70. Okay. Then go to the styles and enable value area high, value area low. Then these are my color settings. So make the value area high red, value area low red, and POC orange. And then you can decrease the opacity of these levels. Now, the problem with using ICT alone sometimes is, even though you have clear levels, you can get faked out. So for example, there is a fair value gap here, right? And price goes into that fair value gap, and we get a market structure shift, right? So what price can do is go back up again and then reverse, okay? So here you would take a loss. Now this strategy is going to eliminate that. I'm going to give you a mechanical step-by-step methods, okay, that you can follow and take your trades with high precision. So what we're going to do here is, first thing first, use your fixed range volume profile after you have used your settings, copy these settings, and make sure your time zone is also set to New York, okay? So fixed range volume profile. And then you want to draw out your volume profile from the start of the day, which is at 18, okay? And you want to drag it all the way till 8:55. 8:55. So now we have a volume profile. And now this may look confusing to you, but it's actually very simple. And I'm going to explain to you why it's so simple and how it can help you take amazing trades. So right now you're seeing three lines. We have the orange line, red line, and red line. The red line up here is value area high. Okay. The orange line is POC, and this red line here is value area low. The volume that is above the value area low and the volume that is below the value area high is called balanced market. And 70% of the transactions happened within this box. Okay. So it is the 70% of volume is marked out by this green histogram. Okay. The volume above the value area high that is shaded by this gray box is the lowest volume, okay? So the entire volume here is 70%, and this is the lowest volume to the upside. And below the value area low, we have the lowest volume. So 70%, lowest volume, lowest volume. Now, a simple way, okay, to identify failed auction. And what is failed auction? So for example, I'm going to go over here. And let's say that we have a volume profile, something like this. Okay. We have the value area high, value area low. And let's say that this is the POC. And let's just mark this orange. Okay. So first thing first, anything that is the price, if it's between the value, which is again the 70% of the volume, that is a fair price and people are happy, okay, within this price level. Anything that goes above the value area high is considered abnormally, okay? So all these players, this auction is going to try to push the price down, okay? And when we are above the value area high in this case, you can look for short positions. And there's a way to take a breakout to the upside as well. I'm going to go over all of that, okay? So we're going to go over the failed auction and the breakout setup. So when we are above the value area high, you can be anticipating short positions, but there are confirmation. You can't just take a short position just because price is above the value area high. You have to look for confirmation. And vice versa. If price goes below the value area low, okay, and then it kind of reverses like this, that is a failed auction to the downside. Okay, so they tried to create a new balance or new breakout of this level, but they failed. Okay, and again, guys, if we are above the value area high, and then we close below like this, reject, that is failed auction to the upside. So with that in mind, what we can do is use the specific timing, okay, this kill zone period that I've created, and you can take amazing trades with this setup. So first I'm going to go over the failed auction setup, okay? So what we are, after we have marked out our volume profile from 18 till 8:55, we will have two scenarios. So number one scenario is after you marked out your volume profile, we are within the 70% of the volume, which is called balance, okay? So the 70% of the volume, which is below the value area high and above the value area low, is called balance. If we are inside the balance, after 8:55 on the 5-minute time frame, we are waiting for price to first close below the value area low. So close, this is the keyword, not wick, but close, okay? And then we need to see a failed auction. So we need to see price reclaiming the value area low and closing above it. Once we have this set up, that is going to be my long entry, either at the retest of this value area low, or if we have a fair value gap here to make my trades more precise, I'm going to use that fair value gap or an auto block. And this is where the ICT concepts come. So also you can look at liquidity sweep. So if you have swept some liquidity, that is a plus point. So entry at the retest, and then you can pretty much target the value area high, okay? Because if we fail to break below the value area low of the range that we draw, and we close above it, the next target is potentially the value area high. And price will go here. And vice versa for shorts, right? Now, there are going to be scenarios where price is just going to drop lower. So how do you trade that setup as well? And let's go over that. So this one was the failed auction setup where we close below the value area low or high, and then we reclaim that level, and then we take an entry. Also, let me go over the second scenario where price is already below the value area low before 9 a.m. open. So we draw our volume profile from 18 till 8:55. And if we see that price is already below the value area low, then we are just simply waiting for price to reclaim that level. Okay, and I'm going to give you guys examples and you will understand what I'm talking about. So when that happens, you can take an entry. Okay, so the first scenario, we are above the value area low before 9 a.m. open. And the second scenario is that we are already below the value area low and then we reclaim that level. So let's talk about the breakout. So let's say price goes below the value area low. And when it tries to reclaim that level, we see a rejection wick on the 5-minute. When we see that rejection, we are waiting for price to create a new balance. So for example, I want the price to consolidate here a bit, create equal lows like this, okay? I want price to create equal lows below the value area low. And we also see rejection after we broke out of this value area low. Now, the way that I would enter is as soon as we see like this significant volume candle, or like not like a small 5-minute candle, but like aggressive 5-minute candle breaking out of this, that is going to be your short position. And you can put your stop above the value area low or above the high. Okay. And then you can pretty much target usually the previous day's value area high, the POC, and value area low. Now, what I do is I use Orderflow tools to get my entry very quickly, right? And with much better precision. But what I'm teaching you right now, I promise you, it's very, very accurate, okay? And it's not much difference, but it's crazy. I'm going to give you guys examples. I'm going to show you examples, okay? So that's pretty much the setup. And again, if you consolidate above the value area high, we break out, we retest this level and fail to reclaim it, then that is a breakout model. And then again, we have the failed auction model, right? So let's go over here and let's see what exactly happened. So let me just remove all of this. So we draw our fixed range volume profile from 18 till 8:55, okay? Now, you can clearly see that we are above the value area high, okay? So all we really need to see here is price closing below this level. And you can clearly see that we closed below this level. And what do we have here as well? We have a fair value gap, okay? So that is your precision with ICT, okay? That's what ICT helps you with in this model. And then again, we have this up close candle as well. But this would be my entry. I would put my stop loss above the bodies here, okay? And I would target the value area low. Now, the point of control, the orange line, is a good area to take a partial or go break even. And if the point of control is somewhere around here, for example here, I would go break even here. Because point of control most of the time is the first lowest hanging fruit. So you can take a partial or go break even at this level. And as you can see, price just pushed down. Okay? And then you can see we also had a breakout trade in the same day. So we closed below the value area low. Okay? We came back and retested this level, value area low, but we saw rejection. And then we had this low over here. So ideally, I would wait for a little bit of consolidation. Probably we had it on the 1 minute time frame. So let's see, because I usually trade on the 1 minute when I'm on Orderflow, using Orderflow. So if I go on to the 1 minute time frame, you can clearly see, guys, we consolidated here on the 1 minute time frame. Okay. And that is, we are building a new volume profile or new balance here. And price is not accepting higher prices. It doesn't want to go up because the buyers, or we could say the algorithm that was trying to buy from here, it just failed. So again, we're going to be taking our entries on the 5 minute. After we see a break of this low, you could have taken another shot to the downside. Let me give you guys another example. All right, guys, here is another example. So you want to go here, fixed range volume profile, and then you're going to go to 18, the open of new day, user volume profile till 8:55, right here on the 5 minute time frame. Now, again, you guys can clearly see that we were above the value area high before the 9 a.m. open, which is right here. And now what you can see, guys, is we close below the value area high. So that is a failed auction. This right here, they tried to break out to the upside, but they failed. Okay, so this close here could have been your entry. And what gives you more conviction is that we inversed this 5 minute fair value gap. Okay, so this right here is your short position, stops above the bodies of these candles, and we target the value area low. Now, notice what happened here as well. We have the value area low down there. So we aggressively closed below the value area low. But what happened next? We reclaimed the value area low. So that is another failed auction on the same day. And one more confluence, we swapped liquidity. So when we closed above here, that could have been your long entry as well because we don't have a PD array to the downside. So I would honestly take my trade here, put my stop below the bodies of these candles. And ideally, I want to go for at least 1 to 2, okay? So the play that what I would do here is I would go break even at the value area high or take a partial, and then I would hold the trade till 1 to 2. Now here, for the third time, when we came and reclaimed this value area high, we failed. So we pushed up. So this is the most important thing that I'm about to teach you right now. You can take max 2 trades per day in different directions. So if you take a short position here and you take a loss, you're not going to take another short position to the downside. So if you took a loss here, you will be anticipating a long after we close below the value area low first and then we reclaim. Also, make sure that we close below the value area low. This candle closed. It didn't just wick. Okay? We don't want to see a wick. We want to see a close and then we reclaim. Okay? Had we consolidated here and we broke that low, we would have taken a breakout trade to the downside. So let me give you guys another example. All right, guys, here is another example, and that is a crazy trade. So go over here, fixed range volume profile from 18 till 8:55. So what you can see, this is the 9 a.m. open, and we are below the value area high and above the value area low. So we are waiting for price to either break out to the upside first, close above, or close below. So in this case, we went up and closed above the value area high. Okay, so we closed above, and then what happened? The next candle, it closed back, reclaimed the value area high. So this is going to be your short position. Put your stop right above this high to be on the safe side, and you could have targeted the value area low. Now, when you take one trade and you win it, you will call it a day. You're not going to take a second trade. Okay, this is very important. So now, notice what happened here. We went below the value area low. We had a close below, step one. We wait for a reclaim. We closed here. And then you could have taken an entry on the retest. Stops here. The POC is going to be your point of control, or in this case, since it's giving you 2.44, and you know that we are not accepting higher prices, so probably the bias for the day is bearish. So you can take a quick scalp here as well and take out like 2.44 RR, and it went for 3.61 RR, okay? So literally the most mechanical, simplest trading strategy that you can use, okay? If you are interested in learning order flow and how I would literally take an entry somewhere around here by looking at these levels here and identifying key levels around this area using order flow, you can join the community. Trust me, it is going to be worth it. I'm going to get you profitable in 3 months. If not, you're going to be, you can basically get a refund. Okay, I don't usually promote my thing, but it's going to definitely help you. But this video alone, guys, I swear, you can trade this strategy. Okay, pick one strategy and trade it. I have a couple of models on my YouTube, but if this resonates with you, if it gives you freedom of time, then trade this. Okay, it's extremely mechanical and it's really, really simple. So right here, what you can see, guys, is once we broke out of this level, okay, so here, around this area, okay, we broke below the value area low. So let me just point it out like this. Let's make it red so it's not confusing for you. So we broke here, we went back up, retested the value area low, and then we broke this low here. So that is a breakout trade. Now, to not be confused, you can pick one model. You can either just trade the failed auction model, okay, or you can trade the breakout model. Personally, I would trade the failed auction model because at the end of the day, if I take a loss, then I'm going to call it a day, okay? And usually with this model, if I take one loss, I would call it a day, okay? And if I take one win, I'll call it a day. Because in the long run, your equity curve is going to look like this, okay? It's going to be something like this. So let me give you guys one more example. All right, guys, here's the last example. We're going to use our volume profile from the new day open. So it's at 18 New York time. And we're going to drag it along till 8:55. So now you can see we have the value area low, the point of control, and the value area high. The volume in between this is around 70%. Volume above the value area high is the lowest, and the volume that is below the value area low is the lowest. And if price goes below the value area low, that is considered abnormally. So notice what happened here. We have 8:55, and this is a 9 open. So we are above the value area low. So at this point, we are waiting for price to first close below the value area low. Okay, it could go reverse from here to the upside, and we can get a short position, a short setup. But what happened here, guys, is when we closed below, we immediately pushed up. We had a market structure shift. That is extra confluence. And on top of that, we have a retest of the value area low. And then you can clearly see that price went up and it just kept going up for the entire day, right? So yeah, that's the entire model, guys. I hope you guys enjoyed and learned something from it. Please implement it, but make sure you backtest first because you don't want to go into the charts blindly and just trade, okay? And if you're interested in learning order flow, there's a link down in the description. Click on it and join us. Thank you so much. Mwah.